Rand still trading around R6.86, so pretty unchanged from yesterday morning's levels when we were chatting. Looks like there's been very little out there to move it though.
Absolutely, Stephen. The Rand, in our view, remains stuck in a 6.83 to 6.95 kind of range. At this point, the Rand's direction is still largely dictated by global events, and primarily the political instability that we're seeing in the Libya, sort of Saudi Arabia region, but also concerns over Japan. So that's really dominating the Rand's direction at this point. And looking out further to the week, even though there is quite a bit of SA data that we're expecting, it's not really of the kind of importance that would see the Rand move out of this range in the short term.
How about the euro? What sorts of effects is that having? Because we've seen a bit of a tug of war with the euro, where it strengthened yesterday on expectations of higher interest rates after ECB President Jean-Claude Trichet again talked about the inflation target being missed at this stage, and reinforcing the view that we could see interest rates going up there next month. But we also have some concern about Germany and the weakening role of Chancellor Angela Merkel.
Yes, absolutely, Stephen. What's quite interesting is that the euro has, of course, weakened against some of its major crosses, but seems to be holding its own against currencies like the pound and the dollar, which are weak for many fundamental reasons. So it does seem like the euro is being bolstered at this point by expectations of an interest rate increase, and certainly the comments that come from President Trichet at that meeting could serve to dictate the euro's further direction. At this point, it looks like they're only looking to hike, to do one interest rate hike this year, not a series of interest rate increases. But of course, should the tone of his speech change, or should they indicate that more increases are likely, that would certainly then dictate the euro's further direction.
Well, after those weak consumer confidence numbers on Friday, we had consumer spending numbers out to the US yesterday, and they looked pretty positive. We have house price data coming out today, and that really seems to be the sticky one for the US.
Yeah, Stephen, as far as the household consumption is concerned, it was much stronger than had been anticipated, up 0.7% month-on-month in February, and that's against expectations of a 0.5% increase, so much stronger than was expected. And that's despite the fact that consumer incomes in the month rose by less than what was expected. So at this point, it's certainly looking good for the US consumer, and we know that consumers form the bulk of the US economy, so certainly looking positive on that front. But what was of concern in yesterday's data is that the core PCE deflator, which is a measure of the inflation that's faced by consumers, rose faster than expected, and as a consequence we saw real disposable income, which is what consumers have left over after tax to spend, actually declined in February. So if we continue to see inflation rise quite strongly, then looking out over the rest of the year, then consumer spending could be under pressure in the US.
Well, we chatted about the US GDP revision yesterday. That was revised up to 3.1% for the fourth quarter of last year. We're getting the UK GDP revision today, the final estimate, and the second revision was minus 0.6%. Are you expecting any further deterioration there?
No, Stephen. As you indicated, the initial estimate was a contraction of 0.5%, and that was then revised upwards to a decline of 0.6%, but no further revisions are expected from today's data.
We had Deputy Finance Minister Nhlanhla Nene yesterday speaking and talking about how much the government and the Reserve Bank spent last year trying to manage the Rand. 50 billion Rand, that's what they spent. Is that more than you would have expected?
It's roughly in line, Stephen. The finance minister had indicated at some point last year that South Africa had spent an equivalent of almost 2% of GDP on trying to shore up or trying to manage the Rand. And we've also had similar comments come out of the SARB, with Governor Marcus indicating that the SARB actually lost money last year trying to also manage the Rand. So it wasn't unexpected, but certainly 50 billion is a very large figure, and I think just underscores the difficulty that the South African authorities are facing in trying to manage the Rand.